Hey, good morning, guys. We're going to go over our Forex trades for today, Thursday, May 14th. Didn't have any scalp trades. We do have Mario Draghi speaking literally in the middle of the morning. Uh, well, not little late in the morning, actually, 11 o'clock in the morning. But so with him speaking, we're not looking to do any scalps in case you get stuck in something for an hour or so, hour or two. You could get caught by his speech, which you don't want to do. We do have one swing slash scalp type trade that's on. It's an Australian dollar, US dollar, that we put on late last night. So we're holding that right now. We may hold that into the meeting. We don't know. We'll see. But it's a small position because we're risking a lot, so we have a very small size. So we're not too concerned about it. But we did liquidate the two correlations trades. That's what you're seeing, one of them here, and we'll switch it to the other one in a minute. Um, the two correlation trades in this one, this is the Australian dollar, New Zealand dollar to the Australian dollar, US dollar. As you see here, we were long the Australian dollar, US dollar, and short the Australian dollar, New Zealand dollar. We were in these things for this one probably close to a week. But as you can see, when we eased our way in as well. So we ended up with this one. We ended up having 45% of our intended size, or I should say our normal size, put on half in the beginning, 30%, and then we put on 15 more percent as this New Zealand dollar, as the Australian dollar, New Zealand dollar started to spike. And if it was going to continue to widen, we could have put on another 10 or 15% to get up to the 60% mark that we were looking for. But it didn't happen. What happened here, you had the New Zealand dollar, US dollar started to spike, and then yesterday and then again today, or I should say, last night, because this candle is going to be encompassing last night, started to pull in. So that the spread between the two started to narrow. We weren't on this trade. We ended up pulling out, adjusted for size, 27.9 pips on the profit side. So this spread, if you're still in it, this spread may continue to narrow, and it could very well narrow where it will touch, just as you see it's done here back in the end of April, as it did here in January, as it did here back last September, and again last September 2 times it touched. So, and if it touches, you're going to have a huge win on your hand. We're not always in it to look for the touch. We're looking for the spread to begin to narrow, whether we make 27 pips on this one, or we make 57 pips on another one. It's all relative to speak, to say that we're just looking for a profit. We're not looking for them to actual touch. If they were to happen to actually touch in a very quick manner, man, it would be a home run. But that's really not our intended goal. We always, whenever we trade, we always look to take a profit. But again, when you do correlation trades, that they're highly correlated. You know what the max spread has been throughout the past year. And again, when you know that they're highly correlated, when you do your research, you'll see this one is in the neighborhood of 85% correlated. So that means 85% of the time they're going to move. Not I want to say exactly the same, but they're going to move the same way, and the other 15% they're going to deviate. So that's what you're looking for when they deviate, and then the capture the move when they come back together, or at least start to come back together. Some of the correlation pairs we put on are 90, 92, 94%. Some of them are 78%. So by me telling you what the percentages are, what I'm getting at is that the odds are in your favor. So they're very low risk trades. Why are they correlated? They're correlated for many reasons: economies, central bank policies, Fed policies, and the way the buyers and sell them. Why do they become uncorrelated for that? Let's say on this one, if it's correlated 85%, if they become uncorrelated that 15%, why? An economic anomaly, maybe one of the pairs, or I should say, one of the country's currencies within the pairs is having an economic release that's making it move faster than normal in one direction. more buyers and sellers. But they're normally short-term spikes. When I say short-term, they could be hours, they could be days, they could be weeks, a couple months. So, good trade, really solid trade. I'll show you the next one we had. You probably remember from past videos, was pound to US dollar. I have to remove this one. And it was correlated with the New Zealand dollar to US dollar. And let me just change this so you can see it better. Okay. This one, you can see how the correlation moves most of the time together. Every once in a while she separates and they come back. They separate and they come back. It separates, comes back. Separates, comes back. And then it started to separate again. Here we were short the pound US dollar, that's the candlesticks, and we were long the New Zealand dollar US dollar. Again, we pieced our way in. We had about 55% of our normal size, initially 30%, and then we averaged in with 10 and 15. We were going to put on another 5% if she moved up, if it continued to widen, but it didn't. Even though the pound US dollar continued to rise, it was rising in a much slower manner than the New Zealand dollar US dollar had a spike. Unfortunately, the spike wasn't fast enough. We ended up losing 19 pips on this trade. It was only because we decided, since we had all of them on at the same time, we decided, as soon as we're profitable on everything, we'll take them all off at the same time. That way we're not tying up capital anymore, and taking any risk by having just the one out there, going from a profit then looking at a loss. So we knew everything together. We were up, a total of about 9 pips. So it's like, why not take it, right, and move on. So we liquidated this pair. If you're still in it, this pair still has a great opportunity to narrow. If this starts to widen again, the max width has been about 700 pips. And when we put it on, it was about 500. We're going to monitor this. If this New Zealand dollar, US dollar starts to pull back again, or this pound starts to rip higher, and it gets to 500-600 pips, we'll look to put this pair back on. So if you're still in it, that you don't want that to happen, right? Because you're going to want to liquidate it. You might get a chance. Who knows? But this pair will eventually touch. That much we know for sure. So low risk trade. Again, on this one we lost 19. The other one we made 27.9. All total 8.9. That's all adjusted for size. So we'll take it and we'll move on. Like I said, we did the video early today because of Draghi. So we'll be monitoring to see if we could get any correlated pairs back on again later today, this morning, tonight, whatever. But as you know, we love these. You just don't get them all the time. You only get them when the volatility spikes, and recently we've had the volatility spiking in these in the Forex market and in many markets. So we'll take it. We'll move on. That's it. We're going to wrap it up. If any signals come out, they'll be coming your way. If you're still trading now, good luck. If you're in these things still, there's going to be ample opportunities to get out. So continue, to trade them as you wish. So that's it. Have a great rest of your day, and we'll be back tomorrow, assuming we get some action tonight and tomorrow morning. Have a great rest of your day.